All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. I hope you all had an amazing weekend and a wonderful Mother's Day. Happy Monday, everybody. Today is May 13th, 2024. And the top story this morning is China. WTF is going on in China. We had a major milestone just hit over the weekend. China's total social financing. It's an obscure metric. It's not something we follow here in the States, but it's a very important metric of credit and lending activity in the Chinese economy. It gets a lot of press over there, and it just went negative for the first time since 2002, specifically the first time since January of 2002. Total social financing went to negative 200 billion yuan for the most recent month. That's about $27.7 billion US. It's not a huge number. It's not a huge contraction, but it is a contraction. And we have not seen a contraction in over 20 years. Most notably, January of 2002, not 2022. January of 2002 was the last time we saw a negative number in total social financing. And that's an important milestone because you guys might remember, this is going way back, but it was December of 2001 that China was first admitted into the World Trade Organization, the WTO. So a month after they were admitted to the WTO, they had 1 month of negative total social financing. And then ever since then, it's just been this mammoth economic expansion in China, that the Chinese growth engine, the China shock felt around the world. That's over now. After 22 years, more than 22, almost 22 and a half years, that is over. China's lending activity contracted. So what the hell is going on in China? Well, nobody wants to borrow. What's the biggest growth of the Chinese economy has been real estate. It's been property. It's been households pouring every last iota of household and family net worth into the real estate market because it's the only way to get married and start a family in China, believe it or not. Well, that's over now. Since the three red lines policy caused the bursting of the Chinese housing bubble, nobody is willing to pour all of the family's assets into a house. So nobody's lending. And of course, banks don't want to lend to developers because the developers can't pay them back. The developers in China are basically gigantic Ponzi schemes who pre-sell apartments and then use the money from apartments they've already sold but haven't built, and then use that to hopefully build the apartments. Yeah, that's kind of a Ponzi scheme. That's how that works. And well, when people stop buying apartments, oops, we already owe these tens of millions of apartments that we've already sold but haven't built yet. Hey, bank, you want to lend us some money? Nope. Nobody wants to lend in China. Nobody wants to borrow in China. Now, you've had a little bit of a sign of life from the Chinese consumer. There's been a little bit of talk of a turnaround in China, at least in consumer activity, nowhere near enough to offset what's going on in the housing market and that collapse of the Chinese growth engine. And so total social financing has fallen. Now, the next thing everybody's going to wonder about is what's the government going to do in response to that? Because China is also issuing about $138 billion worth of new long-duration bonds going out as far as 50 years. That's about to happen this week. So the government is trying to offset this decline in borrowing, of lending to businesses and lending to households. The government's going to come in. They're going to roll out that Keynesian playbook and try to offset an economic collapse with government deficit spending. They are going to borrow more money. Well, who are they going to borrow it from? Because you only have so much liquidity in the bond market, and developer bonds trading at pennies on the dollar. Nobody's really that eager to get into the Chinese bond market either. Well, it looks like the People's Bank of China, which is their Fed, is also going to roll out a play from the Keynesian playbook. They're talking about cutting the reserve requirement ratio, basically reducing the amount of capital that banks need to hold in reserve, which frees up that money at the banks to be invested in things like, how about these long-duration bonds that the Chinese government is planning on issuing? So the way the Chinese are trying to address this collapse of private sector lending is they're trying to loosen regulations on banks. They're going to have their central bank lower interest rates, and they're going to they're going to issue a bunch of new bonds, borrow a bunch of new money, and try to spend that into the economy. Spend it on infrastructure. Who knows? Maybe we need more bullet trains to nowhere with nobody riding on them. That's just what the doctor ordered, right, China? Well, it looks like that's the playbook that the Chinese are going to roll out to try to stem the collapse of the housing market. It's important because that cut to the reserve requirement ratio, it's very similar to the supplementary leverage ratio that we have here in the States. And a lot of people, my buddy Joe Brown over at Heresy Financial has theorized that if we get some kind of a bond market black swan or liquidity event happening here, that the Federal Reserve will suspend the supplementary leverage ratio once again, like they did in 2000, and that will free up banks to pump a lot of money into U.S. Treasuries to hopefully restore liquidity in the bond market. So we might get a little preview of what the U.S. would do here based on what's happening in China. And also we've had, let's see, Country Garden at the last minute, they made their bond interest payment. I talked about this one on Friday in my live stream. Country Garden had previously come out and said, we can't pay this $9 million in interest, which is a pretty paltry amount considering the size of Country Garden. They said, we can't pay it, but it's all right. This China bond insurance company, a.k.a. the government, they've got our back. And, well, apparently there was some meetings over the weekend, and I don't know what was said at those meetings. I suspect some proverbial firearms were placed to the proverbial heads of certain executives at Country Garden because they had a big change of heart over the weekend. And at the very last minute, they made the payment with their own money, averting the moral hazard. So the China bond insurance company has not been forced to step in and bail out any of those developers' onshore bonds yet. Emphasis yet. Also, big news to my the apes that follow this channel, all you GameStop guys out there, Roaring Kitty is back. Keith Gill, the godfather of the meme stock movement in 2021. Remember Roaring Kitty? I like the stock, the guy with the headband testifying in front of Congress, actually entering into testimony. I am not a cat is now like forever in the standing record of things said in the U.S. Congress. Well, he came back over the weekend. It wasn't a whole lot. He posted a picture. We'll show that picture and what he posted, and you guys can let me know what you think that picture means. And, well, the last time I looked, GameStop stock was up over 30% because Roaring Kitty posted a pic. It was his first social media post since 2021, since he basically said, F this, I'm out of here, after Robinhood took away the buy button and meme stock mania kind of fell by the wayside. Although a lot of people stayed very enthusiastic throughout the whole, what do we call that, meme stock winter? Is that what we're going to call that, the last year or two? So I don't know if Roaring Kitty is going to come back and reignite this whole thing, but at least for a short time this morning he did. GameStop is way up just because Roaring Kitty posted a thing. Crazy move in the stock, basically tied to a post on X. What else we got? The Bank of Japan is getting involved here. We've had Ueda, the governor at the Bank of Japan. He came out last week and he tried to jawbone the yen a little bit higher against the dollar. All kind of warnings about, well, you know, we might have to intervene if things get bad. Oh, stable currency is good for the economy and we're prepared to take action. And of course, they're closely monitoring. I just love when government officials and bankers talk about how closely monitoring a situation they are, which means we're not doing shit about it, but we're looking. So don't you feel better when you're closely monitoring every time there's a blast in some country or a bombing somewhere? Like, well, the State Department and the president's people are closely monitoring the situation. Well, gosh, don't I just feel better already? We're not monitoring from a distance. No, we are monitoring up close. So you can rest assured that Ueda over at the Bank of Japan is closely monitoring. Well, you know, I don't really see the point of that either, and neither did yen traders or Forex traders, because the yen kept falling after he said that last week. Now, the yen bounced at a very important technical level last week. That's interesting because it had strengthened significantly. The USD JPY chart had fallen. That means the yen getting stronger against the dollar. But where it bounced, right at that previous high, right at the 50-day moving average, it says the yen is going to keep weakening regardless of what the central bank and the finance ministry do at Japan. And we're also looking at silver is right at that level again, right at that 28.30 level. Come on, silver. You just got to break right above that. Roaring Kitty is back, and that's what started the meme stock movement, and the silver squeeze was born out of the meme stock movement. So maybe, just maybe, Roaring Kitty's Twitter post is enough to push silver sustainably above that 28.30 level. Maybe, just maybe. And platinum is predicted to be operating at another big deficit this year. The supply of platinum is shrinking off of problems in South Africa with the mines and, of course, the sanctions on Russia. Those are the two biggest countries that produce most of the platinum. So we're looking at a second consecutive year of a big deficit in platinum supply. And while the platinum market is not very liquid, we got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what is going on in markets and how come that's not working. There we go. And by the way, while we're doing that, guys, don't forget to hit that like button and subscribe if you're new here because we do this every morning. So come have your coffee with the melon heads as we go through markets. And right now the S&P is up 16 points, about a third of 1% ahead of the opening bell. Stocks are doing all right this morning. The Dow is also up about a third of 1%, up 131 points ahead of the open. And the NASDAQ is also up 66.6. The mark of the beast on the NASDAQ this morning, 0.37% higher for tech stocks. Meanwhile, the U.S. dollar has gone negative, is down 17 basis points at 105.13. So a little bit of pressure on the dollar this morning. That's going to put some upward pressure on your stocks and commodity prices. Looking over at bonds, we've got yields are lower only by a little bit, mostly on the long end of the curve. The 30-year Treasury, 4.616. That's down 3 basis points. The 10-year is at 4.468, down 3.5 points. The 2-year, 4.834, also down 3.5. And the 1-month Treasury at 5.385. Looking over at commodities, we've got gold is down a little bit this morning. June gold futures at 23.53. That's down about $21. Spot gold is at 23.47, down about 12.5. We've got July silver futures at 28.54. That's up not quite a nickel this morning. And spot silver at $28.31, just above that key level. 14 cents higher for spot silver, 0.5%. This is a very important level. I'll show you that chart again today. We've been really just bouncing right around here. Are we going to get that move above it? When we move sustainably above that level, when I see a back test and a move higher, I will get very excited about silver prices. Not quite there yet. We're still right at that point where historically Mr. Slammy has stepped in and smashed the price. Meanwhile, we've got platinum is up about 0.6%. Palladium is up about 0.2%. And West Texas Intermediate crude oil, June futures at 78.83. That's up about 56 cents this morning. Here is that silver chart that I was telling you guys about right around 28.30. These are hourly candles we're looking at here. We broke above it on Thursday and Friday for a little while, came back, failed the retest, tried to break above it, couldn't get above it on Friday. Opened up a little bit lower last night. And then in just the last few hours, we got a little bit of life from silver here. But again, we are just right around that 28.30 level. Let's switch this to daily candles, and then you can see it even more, how this level has really acted as resistance for these last couple of weeks. This is going back to the beginning of the year here. You can see we had a really good February, March, and early April. We stalled out just above this level, fell back below it, and now we're trying to retake it. And if we zoom way, way out here, guys, it's looking pretty good on silver. This is going all the way back to silver squeeze. Again, we failed to recapture this level then. We failed to recapture just after silver squeeze. And, of course, in the big run-up in the summer of 2020, this is also right about the level that we stalled at. So silver still right here. I'm still holding back a little bit. I'm not quite until we get a move above this. I've been saying this for a while. I want to see us come up, retest, and then move higher. And then, well, there's a long way between here and those all-time highs of around $50. And gold has been at its all-time high for quite a while now. So silver's still got a lot of catching up to do. Bitcoin, meanwhile, had an okay weekend, up $1,400 this morning here, $62,871 for Bitcoin. That is up 2.3%, back above this support line around 61,100. Now let's get into the China story. China credit engine goes into reverse, piles pressure on Beijing. The government flags fiscal stimulus as loans unexpectedly shrink. Get ready for the fire hose of liquidity, the stimulus, the government spending, all that stuff. China is going to roll out the Keynesian playbook here. China's shock credit contraction is adding pressure on the government to spend more money and on the central bank to help. Last month's decline in aggregate financing, the broadest measure of credit, was the first in almost 2 decades. With private borrowers and local authorities largely tapped out, the central government signaled Monday that it's ready to step in with a spending boost. The finance ministry said it will start selling the first batch of 1 trillion yuan, that's about $138 billion, in ultra-long special bonds on Friday, raising funds that can be used for infrastructure investments. The People's Bank of China has room to lower borrowing costs, and most analysts expect it will, even though that would add downward pressure on the yuan, which China's not really worried about downward pressure on the yuan. They actually want downward pressure on the yuan because they have a debt crisis going on. But monetary easing has so far failed to stem a property slump, now in its third year. With home prices falling and the job market weak, households are unwilling to take on more debt, however cheap it is to do so. If the central bank is struggling to steer loans toward consumers and companies, there are ways it can support fiscal spending. Instead, analysts expect the PBOC, that's the Chinese Fed, to slash its reserve requirement ratio in the coming weeks, allowing banks to buy the bonds that Beijing is about to issue. Now, that reserve requirement ratio, that says, hey, banks, you have to keep so much cash as a percentage of your whole book. You got to keep so much cash in reserve, and you're not allowed to spend that money on anything. You can't invest it, nothing. You just got to hold it on the books. Well, if they cut the reserve requirement ratio, now those banks are free to invest that money. And then the Chinese government says, oh, hey, banks, while you happen to have all this sudden cash you're able to invest, here's $138 billion of bonds that I'm selling. I'll borrow that cash and spend it right into the economy in order to try to stimulate economic activity. So that's the Keynesian playbook that the Chinese are rolling out here. The PBOC is also expected to make a small cut in its key lending rate by the end of June, according to Bloomberg. Money supply growth has been slowing for quite a while, and the drivers are insufficient demand, weak market confidence, and idling financial resources, Everbright Securities analysts, including Gao Ruidong, I hope I said that right, Gao, wrote in a report on Monday. The second quarter is still a potential window for cuts to the reserve requirement ratio and interest rates. The credit decline was just one in a slew of disappointing data releases since market close on Friday. It followed weak consumer inflation, another drop in factory gate prices, and a 56% plunge in foreign direct investment into China last quarter. So let's talk about some of those economic data points. Here, first of all, here's the one. Total social financing in China, which is a broad measure of credit and liquidity in the economy, logged a negative reading of 200 billion yuan in April, the first contraction since January of 2002. That's compared with a 4.87 trillion expansion in March. Now, here's a one-year chart right here. You can barely see it. There is that negative number. And you see we've had expansion for the better part of a year. But to really appreciate this, we got to go to a max chart on this. Now, look at the max chart on total social financing. You can see all the way back here, January of 2002, they had negative 472 Chinese yuan in total social financing. That's, number one, the earliest data point in this entire data series. It doesn't go back any further. That was only a month after China was admitted to the World Trade Organization. And now you can see this chart has been moving up. It's been noticeably volatile, big highs, big lows, right? And the gap between them growing substantially. But now you'll notice all of a sudden here, wham, all the way down, back below that zero. That is a collapse in lending activity in China. That is majorly deflationary, majorly recessionary. Again, guys, the bubble in China, it is the biggest bubble in history, the Chinese property market. It's a bubble within a bubble within a bubble. And the great China expansion, I mean, this chart tells me it's over, all right? The China shock, it is in the rearview mirror, and China has got a rough couple of years ahead of it. And I would also point out that this follows just after what were we, just 2 years removed from the first decline in China's population, right? 2022 was the first year the population in China declined. 2023, that decline accelerated. It's probably going to accelerate further in 2024. And now we've got lending is in decline too. There's a rough couple of years ahead for the Chinese economy. And I would also point out that we got the Chinese inflation rate here. It is 0.3%. That is a year-over-year number, not month-over-month. So China still technically has a little bit of inflation, 0.3%, not very much. They've swung between very low inflation and very low deflation over these last few years or last few months. 3 consecutive months of inflationary numbers here, but still inflation not really a problem in China. They're more worried about deflation. When you've got a debt bubble and you start deflating, your problems get even bigger. And that was the CPI. Now look at PPI. China's producer price index declined by 2.5% year over year in April, compared with market forecasts of a 2.3% fall. So factory prices are falling. They're falling faster than forecast. That's following a 2.8% decrease in March, and it's the 19th consecutive month of contraction in factory prices in China. So China has been, depending on how you look at it, they've had mild, very mild consumer inflation. They've had producer deflation for the better part of a year and a half now. So the problems in China are not going away anytime soon. And we had this one just a few hours ago. China averts moral hazard for now, with that asterisk, after Country Garden pays. Just a few days after Country Garden said they wouldn't pay, miraculously, they came up with the money. A Chinese program to backstop distressed developers' debt dodged its first potential intervention after Country Garden Holdings paid bond interest, averting the moral hazard that such support may fuel. The distressed developer paid interest totaling 65.95 million yuan, or $9.1 million, on its 3.95% note and 3.8% bond, according to company filings. The coupon payments were made despite Country Garden saying in a statement on May 9th that it couldn't meet initial deadlines that day and that a guarantor would step in if it couldn't pay within 3 days. Both notes are guaranteed by state-owned China Bond Insurance Company. We cannot rule out the possibility that Country Garden might have been pressured by the regulator to cough up the cash for the coupon payment rather than triggering the payment clause under the bond guarantee program, said Zerlina Zheng, senior credit analyst at Credit Sites, Inc. China Bond Insurance may have been possibly concerned that a failed payment by Country Garden would reduce the willingness of other developers that are covered under the bond guarantee program. In other words, moral hazard, right? Everybody borrowed this money from the bond market, and they're saying, well, it's okay if we don't pay it back because the government has our back. Well, Country Garden would have been the first to lean on that bond insurance program. They said they were going to late last week, and then at the very last minute, they had a change of heart. Gee, you think maybe somebody in the Chinese government may have strongly suggested that somebody at Country Garden come up with that $9 million to avoid the moral hazard? Because the Chinese government does not want to get in the habit of bailing out their bond developers or their real estate developers' bonds. Moving on from the China story, we got another one. This one, Roaring Kitty is back and GameStop stock is rallying. The company still is struggling to make money. This is a crazy story. There's Keith McGill. There's Roaring Kitty from his testimony in Congress. Gotta love the fact that he had the kitty hanging on the wall behind him while he was testifying. He did put on a suit. He had his headband hanging off the corner of his projector screen behind him. But Congress went after him, after Robinhood and all that crap that was pulled during meme stock when they took away the buy button. It was kind of a joke that they hauled him in front of Congress and tried to make him out to be the villain here. He caught Wall Street with their pants down, and all he did was openly discuss his trades in a public forum, and they tried to vilify him. Instead, they turned him into a freaking demigod for the meme stock movement, and now he's back, and the stock is rallying again. Roaring Kitty is back. Keith Gill, whose bullish analysis of the video game retailer GameStop on Reddit during the pandemic created a national phenomenon, made his first social media post on X in 3 years in a cryptic post meant to show he was paying attention. And here is that post right there. This is at the Roaring Kitty on X. And this is what he posted. Okay, so I mean, guys, right now you have got people all over the country are hyperventilating and analyzing and zooming in and trying to figure out what he's saying. He was leaning back and he was, all nonchalant, and now he's leaning forward. Okay, and the chair's red and there's an arrow pointing to him. And me and my moderator Mish were wondering, what is he holding in his hand? Is that the TV remote? Mish thinks it's a video game controller. It kind of looks like he's holding it with both hands. All right. Roaring Kitty is now leaning forward. He's slightly less relaxed than he was a few minutes ago. I don't see the big deal here. I really don't. Just the fact that Roaring Kitty posted it, and it's the first thing he's done on social media in 3 years. I guess his hiatus is over. That is a material fact, but it's he didn't say anything. He just posted this picture. And look at what GameStop is doing. The stock is up 51% this morning. It was 35 when I looked. And I'll be honest with you, I was a little nervous about saying that the stock was up 35% in the live stream because it had been like 3 minutes since I looked, and I was afraid it might have only been up 5%, like the whole rally might have faded by now. But instead, it's up 51%, trading at $26.35, up $8.89 here. Keith Gill, Roaring Kitty, publishes this picture on Twitter It's his first tweet in 3 years, and GameStop puts on about $2.5 billion in market cap, up 51% here. I don't know, guys. One thing I can tell you is if we get another meme stock rally, you can pretty much bank that we're not going to see a rate cut anytime soon. If these stocks start rallying 100, 200, 300% like they did in 2021, you're not going to get rate cuts. That's for sure. I'm going to stop short of saying we're going to get those 200, 300% rallies. This thing could fizzle out as soon as it starts. At the end of the day, it's just a tweet of a picture. It's not substantial. But if this is the first of many, if people are going to fall in line by the hundreds of thousands or the millions behind Keith Gill and start buying up these shares again, then yeah, maybe that could happen. I mean, what's the short interest on this one? The statistics, granted, Yahoo Finance isn't always that accurate, but short percent of the flow. All right, there's about 28% short interest in this thing. And, that says nothing about naked shorts and failures to deliver and all that other stuff that's going on. All the other imaginary shares that are created out of thin air. Maybe this is going to start up again. I mean, let's just see. What's AMC doing this morning? If GameStop is up, I'm assuming AMC is up as well. AMC is up 22% just on the news that Roaring Kitty is buying stock again. So, all right, I guess we're going through this again. And meanwhile, I just have to say, silver still sitting 28, 27. Can't quite get above that 28, 30 level. So if Roaring Kitty has re-energized the meme stocks, he has not yet re-energized the metals yet. But hey, he might. It's just going to be one of those days. All right, let's talk about this story too, because this is another big one that's out there. The BOJ, Ueda ramps up yen warnings while traders keep selling. The collapse of the yen. The Japanese finance ministry stepped in last week. They dumped about $60 billion worth of US dollars to try to prop up the value of the yen. It worked for a while and then stopped working, and the yen started falling again. And it looks like late last week, the BOJ's governor, Ueda, came out and he was trying to jawbone a little bit using some strong language, but it had little effect, if any. Bank of Japan Governor Kazuo Ueda fired a salvo of warning shots to financial markets about a potential policy move as he beefed up his language on the weak yen while traders continued to sell it. Abrupt and one-sided weak yen moves raise uncertainties and are negative for Japan's economy and undesirable as, for example, they make it hard for companies to formulate their business plans, Ueda said on Wednesday at an event in Tokyo. It's natural for the central bank to consider taking action if foreign exchange moves hit the nation's price trend, he added. So he didn't say he was going to. He's saying it's very important that the yen is stable, and it's only natural that a central bank would step in to support it. Saying all these things, tiptoeing, dancing around, prancing around, are the central banks, or will the central bank in Japan support the yen? He just stopped short of saying that they would. The governor appears to have adjusted the tone of his remarks on the yen after meeting with Prime Minister Fumio Kishida on Tuesday. The talks generated speculation that Ueda may have been asked to stick to a tougher line on the currency after comments he made last month fueled further yen selling. Ueda's more robust line on the yen on Wednesday appeared to gain little traction with market players as the currency set a fresh intraday low of 155.51 against the dollar amid continued selling. These shifts in communication aren't likely a signal of preparation for a rate hike, said Tsuyoshi Ueno, senior economist at NLI Research Institute. They are more likely a reflection of the BOJ's efforts to fuel further depreciation of the yen, while Japan's currency authorities are trying to buy time until there are cleaner signs of a Federal Reserve rate cut. See, really, it's the rate cuts at the Fed that will save the yen, not anything else. One of the main factors driving weakness in the yen is the yawning gap between interest rates in Japan and the U.S. Receding expectations that the Fed will cut rates in the near term have spurred offloading of the yen. So you still have this big gap between interest rates in Japan and the U.S. So, if the Fed doesn't cut rates here in the States, or if those long-term borrowing rates don't come down, you can still borrow in the U.S., you can still borrow in Japan for very cheap and then lend in the U.S., i.e. buy bonds in the U.S., and earn way more interest than you're paying. And that's the yen carry trade. And so it's not so much what the absolute interest rate is in Japan or what the absolute interest rate is in the States. It's the difference between the two that's driving the collapse of the yen. And while the Fed is not moving, at least not yet, and the Bank of Japan just had the most weak interest rate hike I've ever seen, from negative 0.1 up to 0. And so the yen is collapsing because the central banks are taking their sweet time adjusting this huge gap between the two interest rates. And, just looking at a chart of the Japanese yen here, first let's zoom way out. You can see here's what the yen has done since 2020, just absolutely collapsed. You're looking at USD JPY, the number of yen it takes to make $1. Right? So this chart going up is the yen losing value against the dollar. It lost a ton of value in 2022. The Bank of Japan, they intervened here in 2022. And of course, that chart came down. But then as soon as they stopped intervening, the yen started to depreciate again. That took us right up to about Halloween of 2023, which is when the money supply in the U.S. started expanding again and interest rates in the U.S. started falling for some reason. Well, the yen strengthened a little bit against the dollar when that happened, but it didn't last. It started to weaken again. Now I want to zoom way in here on these most recent couple of days. And you can see we got right up to this 152 level or so. This was the prior resistance. Let's put a horizontal line there. I had one. I don't know where it went. Right around this level, the prior high from 2022, the prior high from November of this year. We struggled for a couple of days to break above it, but we finally did. And the yen really moved hard on that one. And then the Japanese finance ministry, they intervened last week. That did bring the yen down at least a little bit. But you notice it came down. Look where it came down to, pretty much right about this line. I apologize for all the squiggles here, guys. But it pretty much came right down to this resistance line, right at that 50-day moving average. And now the yen is weakening again as the chart moves up. And Ueda is trying to jawbone the yen stronger. It's not working. Until those interest rates between the two close, we're not going to see the yen strengthen, at least not substantially, unless they start dumping U.S. treasuries in order to get dollars. And of course, that will only drive U.S. interest rates higher, because when you dump U.S. treasuries, their prices fall. And so their interest rates rise. And you see, selling U.S. treasuries doesn't really help the Japanese, because it drives interest rates on U.S. treasuries higher, which is what's causing the decline of the yen to begin with. So they're really cornered here in Japan. I'm not sure how they're going to get out of this one. And we're a little short on time. I just want to mention this one, guys. Weaker supply will drive a platinum deficit higher than expected in 2024. Shout out to my moderator, Mish, caught this one this morning. Let me just get to some of the key points here. 2024's deficit for platinum is expected to be 476,000 troy ounces, a little bit smaller than the deficit from last year of 851,000 ounces, but still a deficit. On the supply side of things, let's see. Already announced restructuring and slower than previously expected production ramp-ups amid low prices for palladium and rhodium will cut production from South African mines by 2% this year. Also, supply from Russia with planned smelter maintenance in 2024 and continued damage being caused by Western sanctions. That's expected to fall by 9%, a multi-decade low. So we've got less platinum supply coming because of problems in the mines in South Africa, problems with Russian sanctions. Now, on the demand front, platinum's used in catalytic converters to reduce emissions. Demand from the auto sector is set to increase by 2% due to slower consumer demand for battery electric vehicles. The collapse of the EV bubble is good for platinum. Growth in heavy-duty and hybrid vehicle numbers alongside stricter emissions legislation and platinum for palladium substitution, which is forecast to reach 742,000 ounces this year. So to cover the deficit, above ground stocks will fall by 12%. That's after a 17% drop in 2023 to a 4-year low of 3.62 million ounces. So the price of platinum, this looks pretty bullish for platinum here. And I just want to point out, guys, that platinum has been pretty dormant for the last couple of years. I mean, we've been in this range between 1,000 and, the mid eights. Platinum since late April has done pretty well. It's rallied from about 900 to just over 1,000 right now. But really, if you zoom out, platinum hasn't had very much price movement other than this, 890 to 1,000 level here. So the second consecutive year of deficits eating into that above ground stocks. Maybe that's the bullish catalyst that platinum needs here. And I just want to say thank you very much to Learcy. I appreciate that very much. Learcy, you know him. He says JM Bullion is now offering buy now, pay later via Klarna. Yikes. Buy now, pay later. Are they billing for it? Are they charging more? I know JM Bullion, they charge you a lesser fee for an ACH, a little bit more if you're paying in Bitcoin, a little bit more if you're paying with a credit card. Is the price higher if you BNPL it? Buy now, pay later debt to buy gold. The whole thing, I guess I need some more time to marinate on what that really means. Don't go buy gold with buy now, pay later. Don't put gold on the credit card, guys. You buy gold with cash. If you're paying interest or if you're eating late fees for missing a payment on buying gold, there goes all your investment thesis right out the window there. And I'm telling you, buy now, pay later, man, that is going to come back to haunt us big time. You just wait. It's probably going to be a few months, but there are going to be congressional hearings and, Monday morning quarterbacking. How could we have let this happen? Trust me, it's coming. And I got messages coming in. Oh, Mish just let me know. Thank you, Mish. He said GME stock has been halted. I just got a text message from Mish. This just in. Sorry, should I touch my ear like I have somebody in my earwig here? This just in. GameStop has been halted. Thanks again, Lircy. I appreciate the super chat and support of the channel. GameStop stock has been halted, up 54% at the open. Thank you, Mish, for that one. So congratulations to the apes. Looks like you're having a pretty good day. How come they never halted on the way down, though? I gotta wonder. We've had GameStop drop 20, 30% in a day several times. It never seems to halt on the way down, only on the way up. It is interesting how that works, isn't it? Things that make you go, gotta wonder, right? Anyways, congratulations, Bulls. Thank you, Mish, for that heads up. I appreciate that. Let's just leave that GameStop chart up there for a little while, shall we? And thank you, Steve Woitis says, did we ever find out what is causing M2 to rise? No, we didn't. George Gammon had some pretty interesting videos about the money supply and the trade deficit and what's going on with M2 in comparisons to the Great Depression last week. But I'll be honest with you, I still can't quite put my finger on it where that money supply growth is coming from. I just don't know. Something's behind it. It's about $600-700 billion, right? So that much money doesn't just appear out of nowhere. It's not bank lending, and it doesn't, at least on the surface, it doesn't appear to be the Fed that's doing it. I don't know where else money supply growth comes from, Steve, but I'm still working on that one. And he's saying, I bet that B. Carol Baskin has something to do with it. Could be, brother. Could be. Thank you, Steve Woitis. I appreciate the super chat and the support of the channel. And thank you, Brad Bechtel, for the super sticker. What is Brad Bechtel sending? He's saying a great big number one. Incredible. Are we talking about GME, Brad? Is that what that one is? Either way, thank you, sir, for the super chat and the support of the channel. I appreciate that. And thank you, Cole Marsh says, happy Monday, everyone. Love you. You too, Cole. Thank you, sir. You are a gentleman and a scholar. So things are not looking so good in China, folks. And I don't know what the heck is going on with GameStop, but Roaring Kitty posted a thing. Stock is up 50%. And the powers that be said, oh, no, we can't let that happen. Stock is halted. They didn't quite take away the buy button, but they halted it again. Well, it's going to be one of those weeks, folks. I want to thank everybody for having their coffee with the Melon Heads this morning. Thank you, everybody, for the super chats. Thank you to my Patreon supporters and channel members for everything you guys do for the channel. You guys are awesome. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.